Today, it's Edwin's Monday evening Property Rant. Hello again, it's Martin North from Digital Finance Analytics, working on this post covering finance and property news with a distinctively Australian flavour. And just before I start, a quick reminder that tomorrow, Tuesday at 8 p.m. Sydney time, I'll be running my next live stream event with Damien Klassen from Nucleus Wealth, and he and I are going to discuss the current state of the financial markets with all the ups and all the downs. So mark your diaries, 8 p.m. Tuesday Sydney. You can ask a question live, or you can send one in via the DFA blog beforehand. Now let's pick up the conversation with Edwin. And today I'm joined by Edwin, our property insider. Hi Edwin, how are you going?
G'day Martin, how are you going? It's getting more interesting by the
week. Yep. I remember somebody saying a few weeks ago that 2021 was just going to be so straightforward. You know, all the issues were back there in 2020. No, I think we're actually facing into them, frankly.
Look, it's just it was just a scratching the surface of what's to come. I mean, it's look at what's happening globally. It's only just going to get more and more interesting as time goes on. But look, I look forward to these Monday evening rants because it's an opportunity to just unpack what's going on, and I guess try to chart a course through not only the property industry but what's happening in general. There's a lot happening all over the world, as I said. Bit of turmoil here and there. More economic grenades are about to throw in. Josh Frydenberg announcing again that JobKeeper is going to cease at the end of March. Listing numbers are still down. I mean, it just goes on. And I even got to watch a In the Interest of the People video that we'll be discussing later on today, Martin. There's some truths in that.
Well, yeah, and I'll tell you, that particular show on the other channel upset a whole bunch of people, but there were some very important messages buried away in there, so we might touch on those. And I guess it's all just reflecting on the tennis, right? So, you know, we've got all of our Australians overseas unable to get back, and yet we've got lots and lots of people who got flown in for the tennis tournament, and then, blow me, they imported the coronavirus again as well.
Look, isn't that the great beginnings of 2021? It's absolutely fascinating just to watch everything unfold and just look at how blatantly stupid our politicians are, no matter what side of the fence you sit on. It's incredible. I mean, there's 77 properties in Melbourne, in Victoria for that matter, that are listed for sale on Domain with tennis courts. So I reckon those guys are on a winner there. You know, I reckon they've just doubled their money. Tennis Australia is going to go out there at to the auctions on the weekend, and they're going to be buying big, Martin. I can see it already. And in the same article, or in the same newsreel that 7 News put out, we also get the leader of the New South Wales Premier saying that there's going to be a vaccine, or they're going to check to see who's been vaccinated before they can enter public places and encourage the private industry, the private sector to also test to see who's been vaccinated before they let them in. I can't wait for this because I can just see property prices going down. There'll be half the attendees at auctions, Martin. I can see it already. There'll be all the anti-vaxxers will just not go to the auctions. Look, I'm not saying that I'm going to be jumping in first cab off the rank to get a vaccine until I don't have to travel, and unless they make it mandatory to get a vaccine before you go to an open house inspection or an auction, I'm not getting it because it's not convincing me so far what the people that are taking it are going to be any better.
Well, it's interesting is because she started off by saying, well, you know, I'm all open for freedom of choice, but then she pretty much said, but, you know, we are going to make it there's going to be some incentives for people to actually get the vaccine. In other words, if you don't get the vaccine, you won't be able to do certain things. I think from a freedom of choice perspective, that's a bad look, frankly. And, you know, there's Norway, of course, where they've got a number of elderly people who had one of the vaccines and they died. So it's not just a one-way street on this.
No, it's not. Look, you've only got to look at the origins of where you and I've been been sharing for. I've been sharing and posting and discussing things with you from January last year, and look at the origins of what's happening there, and in China, and how the medical profession will refuse to take the vaccine there. They said the army can get it. They don't care, albeit it's a Chinese version. But you don't know. But also, one of the things that I've been privy to of late is the fact that a lot of the equivalent of the CMOs over there to our CMOs here, the equivalent rank and file, they're looking at alternatives because they're quite frankly saying that there are just too many variants now with this virus, and like you and I have been saying for a while, this economy is not going to settle down. Issues with regards to property and other economic factors again, there's a lot of dust still going to be flying around in 2021 because there's still a lot of uncertainty. But if we unpack everything and we just take a step back and take a deep breath, we can see there are certain indicators that will hopefully help our followers in making more clear decisions when it comes to buying property and even selling property, for that matter. If you've got something to sell, put it on the market straight away. Don't worry if you take a photo with an iPhone and put it up on the internet, because it'll sell. Put a signboard at the front of the property yourself with your phone number, and post it online yourself, because there aren't that many listings, particularly freestanding homes. But on the other side of the coin, what we discuss is in the area of buying, is you got to be cautious. You got to take a deep breath, and you got to take a step back, and you got to just wait for the numbers to come on. It's early days. It's only the second week in January. Traditionally, these are low listing numbers. The month for low listing numbers. They'll start coming on at the end of January, early February, and we'll see a lot more listings by middle of February, is where we really gauge to see what's happening. But wasn't that interesting also what the NAB put out today with regards to no longer helping mortgage holders that are in stress?
Yeah, so basically it's been happening off-piste, as it were. In other words, the banks have been quietly dialing back their support for people with repayment problems. But NAB's come out now and overtly said, that's it. We're not doing any more to support the virus. They went on to say, we've done a lot to help, etc., etc. But remember that this is in the situation where we are still seeing JobKeeper and JobSeeker dialing down. We've still got the odd local infection patch happening, and so the borders are sort of half open, half closed in some areas. And just in the context too, that there's 20 million now locked away in China, close to its capital city, and their GDP number that came out today was a little bit better than many people thought, but it's still a lot lower than it was previously. So the international economic backdrop is still looking pretty shaky.
It is. It's not. And we've got to, whenever we interpret the numbers in the media that comes out of China, let's look at it. Let's not look at it from the Western with Western eyes, but which is generally two-dimensional. But let's look at it as three-dimensional. We've got a different regime, different governing body, different sets of data that they're working with, and different economic policies that they work with. We may be under a democratic ruling body here, but over there it's a totalitarian government. So it's thou shalt do this and thou shalt not do that, and thou shalt not upset our leaders, otherwise you end up in wherever we decide that you're going to end up with. So there's a lot of things that we need to be careful the way that we unpack things. It's going to be interesting moving forward how the politics unravels in America, in the US, and see how that's going to affect us. But as I've said along to a lot of my followers, and a lot of my followers on Twitter, and a lot of the people that I discuss things with, look, regardless whether it's a Democratic administration or a Republican administration, effectively Australia's become just a football that just gets kicked around anyway. And unless our government starts taking a proactive approach to really look at other international trade partners, we're always going to be dictated by what America tell us to do, and by what China also, in a way, tell us to do also. I mean, there's just off the top of my head, there's something like a 50 million ton deal that just got signed off between America and China with regards to pork. So that's something that totally obliterated our export, but America just picked it up, and that deal just got signed off last week. So go figure. Like I said, we've just got to start looking closely at what we're doing internally, and we've got to start fixing our internal problems before we start trying to fix the problems of the rest of the world. Fix our infrastructure, the deficits in infrastructure, be more proactive with that to create jobs, to create greater and better infrastructure so people can live in decentralized areas, as opposed to lumbering everything in the CBDs like that we're doing, and now it's all unraveled, it's all come unstuck. So, who's to say, Martin? Who's to say how long this is going to take? But one thing for sure is the unemployment figures are certainly not the way many people are still expecting them to be. There's so much uncertainty around that. But let's continue on, and let's see how we can unpack today's rant and see how we can help our viewers.
Yeah, and it's interesting, Edwin, because I made a post yesterday, in fact, on the issue of iron ore exports, because it's quite interesting. If you look at the statistics, we have a large trade relationship with China, and more than half of it's iron ore, right? And it's interesting because whilst China's turning off a few other imports from Australia, they're not turning off iron ore at the moment. But if you think about it, as others are turned off, we become more and more reliant on the iron ore axis, right? So if that changes down the track, then it's going to be an even bigger impact on the economy. So that's a big, big concern. And then more broadly, the interesting thing, of course, is that the international travel, best will in the world, it's not going to shake out anytime soon. We're not going to suddenly see the borders open and we're going to have masses of tourists and masses of students. This is going to take a few years to settle down. And it's interesting, in fact, of course, more airlines have stopped flying to Australia recently.
That's good. Let's look at the iron ore scenario first of all, Martin, and our dependency on China. A couple of weeks ago, I put out some posts with regards to what's happening in Africa. Now, China have already made a move to Africa. They're already getting things started. It's only going to be a matter of months before those mines start kicking off. And don't forget the Belt and Road initiative that they implemented in Africa. Now they're calling in the loan, and basically they're calling in the chips, and they're saying, right, we're going to take over 100% of the mines. The mines that they were on JB with in Indonesia with Australian mining companies. Well, guess what? The directors of one of those big mines in Indonesia sold all these shares before the end of last year, and now they're investing in greater amounts in mines in Indonesia directly with the government that don't have any Australian involvement. So look, they're out to. We're going to learn a big lesson from how all that unravels. That's between the politicians and the greater body. With regards to the international travel, look, Martin, I've got a solution for that. I'm going to tell everybody, look, I reckon you should enroll in acting classes. You would need to enroll in acting classes so you can start applying for jobs in the theatre, in Hollywood or Bollywood, or pick up a tennis racket and start bashing some balls against the side of your house or something like that, because it appears to be that whilst everything else comes to a standstill and all other international travel stops, but it hasn't stopped the movie stars and it hasn't stopped tennis players. So that's my call, Martin. So if you want to go on overseas trips, and if you're going to frequent international cities more often in years to come, I suggest you become a movie star or a tennis player, one of the two.
Okay, and you've missed somebody very important. You could also be a politician or a senior business person because they're also travelling quite freely as well at the moment. But
but who wants to be a politician, man? Come on.
well, that's true. I think I prefer to be a tennis player, although my tennis is pretty bad.
Or you can always become a reporter to go and report on, on overseas politics. I think they're the ones that also travel.
Oh, fair call on that. But the fact is that all of the data that I'm seeing from my surveys is indicating that the SME sector continues to be under pressure, and in fact that pressure is increasing, not decreasing. And the unemployment numbers, I think the true numbers are considerably worse than those actually made up by the ABS. Remember, of course, the ABS doesn't include any people who are supported by the government support packages. The true number is going to go higher, I think, as well. So I keep saying we're in the early stages of this rather long, slow grind in terms of the economy. And yet the markets are saying, no, it's all over, everything's fine, buy Bitcoin and, be happy. I'm afraid that's a little bit simplistic in my mind. I think we've still got a lot of miles to go.
Yeah, very much so. I think Cookie Boy put out a tweet last week with regards to 400,000. There was a survey, and there's about 400,000, potentially 400,000 SMEs around Australia will be, will shut down. I mean, that's is that on top of the ones that are in trouble, that are already in trouble and just waiting for the insolvency moratorium to be lifted before their creditors liquidate them? Is that on top of that? Is that on, or is that the whole mix? But I'd say there'll be a lot more. And like you and I have been saying, this thing's got to go to unravel, and whether the government allows it to unravel quickly, quite frankly, when I had I've had many accidents in my days, Martin, and as I was falling through rafters and through from roofs, you just can't wait until you hit the quicker you hit the ground, the quicker you know what you're going to end up with after that. I've also been in bike accidents and the like, so everything seems to go in slow motion when you're coming down or when you're about to hit the rock face. But you sort of just want it to go real quick so you can get it over and done with. And I think that's what the governments have got to do. It's got to stop slowing this thing down. Let it hit rock bottom so that we can know what we've got and crawl our way out of it and move forward constructively. Because what's happening is really, in my view, and in many people's view, is destructive. Really, it's because all it is doing is bringing other businesses, businesses that are employing a lot of people. It has the potential to bring them down as well, because they will not be able to call on the on monies owed to them by the businesses that are already zombie businesses.
Well, that's right. The longer it goes on, the more the contagion effectively spreads. But of course, it's all hidden until such time as the companies fall over or are otherwise restructured. And frankly, the changes they made to the bankruptcy processes won't really save many. So I think 400,000. I mean, my surveys 3 months ago, I was modelling 400 to 500,000 as those who are in deep difficulty, and I still think that's roughly right. The other interesting thing, and sort of referring back to that post that I did with John on the other channel, I was making the point there that it's interesting how the surveys, the confidence measures in the surveys, oscillate considerably based on the latest news on the virus. Right, every time there's another outbreak, you see confidence drop, and then it begins to recover, and then there's another outbreak and it drops again, right? So this sort of death of 1,000 cuts in terms of confidence is, I think, something which people haven't got their heads around. And it does take quite a long time for the momentum to pick up again. So all we need is a few more outbreaks in other parts of the country, and once again, confidence will slide back, and that will, of course, flow directly on to businesses too.
Look, that's correct, and it just puts more pressure on the people that got conned into borrowing more money, to believing that the end of 2020 was going to be a new start for them. with regards to the Christmas break and the end of year break and the and people moving around Australia by way of internal holidays as opposed to people flying overseas for their holidays, and there was going to be a lot of money spent. But I mean, look what happened then when cities got closed down again, got shut down again, and people that went and borrowed more money to prepare, to be better prepared for other viruses or pandemics or new strands or new clusters, they got caught out, and I heard a number of them say on the news, over social media and over the mainstream, sharing their stories that that's it. That was the last straw. We are a nation. We do come back. We are a nation of fighters. The Aussie spirit is one that particularly has taught me from a very young age to when you go down, you just get dust yourself off, get up, dust yourself off, and you just keep on going. Pick up the bat, pick up the ball, pick up whatever you need to pick up, and then just keep on going. And the old she'll be right, mate. It was a message for myself that saying she'll be right internally. I'll get over this. We'll get through this together as a team, as a group, as a neighbourhood, as a nation. We'll get through this, as opposed to she'll be right in terms of like she'll be right. We'll just let it go for another day. But that spirit is well and truly alive. But it's unfortunate that is being manipulated and being usurped by the politicians that are calling on people to go out and borrow more to get themselves in a hock in order to save the political party out of the proverbial shithole that they've put us in because of the bad choices and decisions that they've made. And like you and I have been saying now for a number of weeks, Martin, that sooner than later they're going to be calling on people to start using the super more blatantly. They're going to be calling people to use that in order to put down deposits and so forth for their homes. Not just draw the 10,000 here, the 10,000 there, but they're going to be saying, look, go out. It's all open. It's an open field now, guys. We just open up the doors, and why? Because governments just want us to use our resources before they come to terms with the fact that they've screwed it all up, and all their resources are just in a lot of cases are just fumes that and they're hoping that now the public sector, the people themselves, ourselves, are going to start opening the doors for us to use our resources that many have saved up for, that many have put away for their retirement, and people are just not going to have anything to retire on, which is a shame. It's shameful what goes on, the decisions they make willy-nilly and stupidly.
Yeah, and very interestingly, Edwin, Freidenberg came out last week and said, well, there's 200 billion sitting in savings that people have, so they should spend that because that will actually help the economy, right? So it proves your point that actually they're looking for that funds. And by the way, nearly 40 billion came from the superannuation funds of people, as well as some of the other payments from government. But the other interesting thing that came out late on Friday last week were two Freedom of Information responses from the Reserve Bank. And they make very interesting reading. The first one basically was discussing whether, in fact, low interest rates has a differential impact on inequality, and specifically whether those people who are savers, are basically getting taken to the cleaners. And they did admit that, yeah, that is true. But then they said, well, of course, but it's all right because house prices are likely to go up. And their modelling was 30% up over 3 years if 100 basis points cuts were applied to the mortgage rate, right? So they've got this model, which, by the way, excludes debt. That's Mr. Tulip's model. It doesn't look at debt at all. It just looks at house prices and interest rate movements. So they've got this view that never mind cash flow, you've got capital growth. And then the second FOI was specifically on this inequality question and whether, in fact, the quantitative easing low interest rates has a differential impact on inequality, and they were quoting some research to say yes, it probably does, but then they said, but of course the broader economics outcomes for the economy are more than offset by any inequality that's created. And I'm thinking, that's the world they're living in. No wonder they don't understand what's going on in the real world.
Well, that's right. They don't realise that we can't. Whenever we're hungry, we can't go out and knock a brick off the wall and bring it in and put it in the oven and have it for dinner at night. I mean, they've forgotten about the day-to-day living. Forgotten about the day-to-day cost.
Roast brick, my favourite.
Roast bricks with spuds, if you can afford them. You can always get a lump of cement, and that'll set your stomach for a very long time.
Yeah, that's right. Yeah, that's called bulking up rather differently, isn't it? I mean, it is crazy. And I keep coming back to this sort of Alice in Wonderland world that we're in, right? So the reality is we've got lots of businesses struggling. We've got lots of households whose finances are still very much being torn to shreds. But you've got others who are absolutely committed to buying more property and seeing property prices rise, and it's being supported by the government, and by the Reserve Bank saying, prices are going to go up 30% over 3 years. It's no wonder that people find it very difficult to make logical and concrete decisions at the moment.
That's right, and again, they don't differentiate between medium density, high density, as well as freestanding homes. Like we said, there was going to be a shifting of the sands, or from early last year, and it has been, and they'll continue to be that way until there is certainty, until there's more certainty, or perhaps a clearer discussion and conversation around the vaccines. But in the meantime, anybody holding onto apartments or relying on the yields of apartments in order to stay afloat, and they're in for a rude shock, which leads us to the point of that bulletin that got put out to the mortgage brokers by the NAB, Martin, and that's that. Now they're starting to call the chips now. That's it. They're calling them. Enough is enough for the banks, and now it's time for them to, I guess, to start putting the screws on and see how much they're going to get out of the pain and the pressure that people are in. Because at the end of the day, it's a financial institution that has shareholders, and they're accountable to the shareholders, not to the loan holders. So their accountability has been called on by the shareholders, and they want to make money. They've seen people pull money out of the banks, sell down bank shares, and they can't have that carnage any longer. And they've got to start calling it, and they're going to start making the play and making the move. So I'd be interested to see and find out what your survey said with regards to what the NAB just put out today.
Yeah, well, it is interesting. Like I said before, we've got some households who are doing it really tough still, and their income has not recovered. Many of those are still on interest deferral and principal deferrals. They're in the process of trying to renegotiate, and some of the banks are actually being more flexible now in terms of the sorts of arrangements they're offering. So partial repayments, right? Because even a partial repayment, even if it's a partial repayment of interest, is sufficient to basically reset the loan and stop it looking as though it's a bad loan, right? So there's a lot of smoke and mirrors going on at the moment, but the question in my mind is to what extent that smoke and mirrors will ultimately come clear, and we will see exactly where we are. It's very hard at the moment to get a good read on how many loans are really bad versus those who are actually hidden, the old extend and pretend. And in fact, a couple of the lenders, mortgage insurers actually came out and said, we can't tell. We don't know what the default rates actually are because that information isn't being made publicly available. So we are still in this fog. The fog will clear, but I reckon it won't clear until probably the second half of the year. And then we will start seeing how many households are being forced to sell, how many households are essentially struggling with repayments, and I suspect that will have a further negative impact. I'm also very concerned that there is, again, differential focus in terms of the pressure on units. So, I keep talking about the difference between houses and units, and there seems to be quite a lot of momentum in some houses, in some areas, but it's the unit sector that absolutely is being taken to the cleaners at the moment, with rents continuing to fall, with many of the investment properties in negative territory now on a net yield basis. And that's going to get worse, not better. And unless there's a massive influx of international visitors, people are not going to be able to let those properties. So that's where I think the cracks are going to appear first.
Look, definitely. Those cracks are going to appear literally on those buildings, and metamorphically, and metaphorically speaking as well, Martin, because it's Highrise is just riddled with issues, let alone the financial stress that a lot of unit holders are going through at the moment. And now, as the banks start changing their policies, obviously now we're going to start hopefully seeing how much trouble there is. But then it comes back to the start of our rant, and that is, isn't it better for the government to allow this to just hit bottom and hit it quick, so as we know what we've got, and the dust can really settle before we move on, regardless of the fact that there's a lot of uncertainty with the vaccines, with new strands. Is it going to be effective? Is it going to be effective? Isn't going to be effective? Which was the topics of your discussions on the other channel.
So, Edwin, one question I had about that particular video was, how many of them were locals, do you think?
Well, from my discussions with the agents, Martin, it was rather interesting that they were saying that potentially it was a 50-50 split. And from what we saw, also from what we saw ourselves as people attending, you start questioning when you see 70, 75-year-olds attending an open for inspection, two-story home. So it's really people that were looking, but the general consensus was people 50 were looking at buying, looking at purchasing in the near future. The other 50% would be neighbours that are looking at putting their properties on the market. And it was obvious in that way.
Yeah, and I've seen that quite often because I've visited a few auctions recently, and there's a lot of locals getting a finger on the pulse, as it were, and they're considering whether they should step into the market. So, there's more than one reason for attending an auction, huh?
More to the point of what you raised in the other channel there, in the other video that you did there with that doctor and John Adams, was the fact that the uncertainty is still there. It hasn't gone away. Yep. If anything, because of the knowledge that a lot of people have now, because of what we've gone through over the last almost 12 months now, people are more aware and more cautious as to and perhaps in a way they're going to be more tentative as to what they do moving forward, because what the point that you raised was very, very clear. If there's no control over this virus and new strands coming, and whether you believe it's propagated by meteoric dust or whatever, or man-made or whatever, regardless, there is a virus, and it's real, and there's a pandemic, and it's real, but we just got to learn to live with it. And what we do is the $64 million question.
Yeah, that's right. And what I think people need to understand about that other show was, whilst there was some discussion about Ted Steele's particular theories with regards to alternative stories about how the virus might have landed, that wasn't where my focus was. My focus was on exactly the point you're pushing on, which is there is uncertainty in many people's minds, and as the virus uncertainty continues, that's going to have an outflow back to the economy. And the other piece of uncertainty, Edwin, which, going back to Highrise, I've had 3 people this week write to me with specific issues raised by their strata committees relating to requiring additional funds for emergency repairs. And some of those repairs are relating to flammable cladding, and some of those repairs are related to structural cracks that need to be addressed for high-rise. This is not over. This is not just a few towers. This is much more structural, literally, many high-rises. And look, I still am of the view that if you're thinking of buying into high-rise, ask some really, really hard questions, because you can get bills out of nowhere, and those bills are not just a few $100s. We're talking $20,000, $40,000, $50,000.
And they'll be ongoing, mate. It won't just stop there. It'll be ongoing. The special levies will continue. And the biggest problem is those issues have to be fixed, will need to be fixed. The people that do pay the strata levies, in funds towards the sinking fund, as well as the special levies that are raised to do all the rectification work, they'll have to make it up for the others that don't. And how do you force them to pay other than take them to the courts, take them to basically bankrupt them and force the sale of their apartment in order to pay those to pay their fair share? So there's going to be major issues, and like we said in the last podcast, and that was that when you're buying into high-rise, particularly now, you have to be so much more careful as to who's built them, how strong they are as a developer, how strong they are as a builder. What are your legal recourses that you have should there be major issues like the ones that you're discussing? Because a lot of builders and a lot of these type of developers, in my view, are going to go broke, and they're already starting to go broke. And some of the bigger names that many thought that they were going to be strong and that they had healthy accounts, and they don't. And there's going to be a lot more issues. And so it's ongoing, and which I guess leads us to the following point, and that is with the freestanding homes, Martin. Look. If you want to buy, we're not saying don't buy, but what we're saying is caveat emptor, buy beware, equip yourself, get as much information, but don't be fooled by the fear of missing out, by the FOMO that's around at the moment. I've shared a video on Twitter with regards to the attendees that open for inspection, but once you unpack what's really happening, there's a number of things that we can talk about in general, not specifically to the property that I videotaped, but in general. One of them is do a bit of research and see if the property price that the agent is giving you is on par with what was happening at the end of 2020. And if it's not, in the ones that we attended with our clients and the ones that our clients attended on their own as well, they were a lot lower. The guides were a lot lower than what the properties, similar properties in the areas were being sold for at the end of 2020. So, all the shenanigans that go on in order to draw a crowd, you've got to understand the marketing strategies that they adopt and they apply, albeit smoke and mirrors, and albeit somewhat against the regulations, but fair trading have got to step in. That's the first. Second, I noticed in certain suburbs that there would otherwise be 7 to 9 properties on the market for sale. This particular suburb only had 2. So it's only a matter of time. And talking to the agents, the local agents, in search of off-market properties for our clients, yes, they did say there's more coming that will be listed over the next 2-3 weeks. They couldn't show some of them, and the reason why was because they were still attending to issues so that they can be presented in the best light, so that they can achieve the best price, which is good on them. At least that's how you do achieve the better price. So it doesn't help our buyers, other than the fact that if we're patient, then there'll be more, and with more economies of scale, there'll be more pressure on prices. But more importantly, and in conjunction and on par with what you're seeing with the apartments, Martin, is this makeshift renovations that people are doing that we've noticed over the last 6 months. Absolutely flabbergasting. And this pest and building reports, there's got to be an inquiry into this pest and building these building and pest reports that are given out by the agents and the vendors. There's got to be fair trading. We've got to step it up, and they've got to start looking at these things, because a lot of the stuff is just not disclosed in these reports, and people are falling for it, unfortunately, right? Because they think that no more property is going to come on the market's going to shoot up by what the RBA is doing, and they're going to see 30% price rises and the like, and all this fear of missing out. It's just it's just the wrong message that's been put out there, and people just got to be a little bit more careful and patient.
Yeah, well, I think we've said, and I'll underscore it once again, patience and getting the right information, doing a lot of research is absolutely critical at the moment. And, I often get emails saying, oh, I should have bought, I shouldn't listen to you, I should have bought. No, we didn't say don't buy. All we said was make sure you do the work, make sure you aren't buying over the odds, and make sure you understand what you really are buying. I mean, those are fundamental principles which should always be applied to property, right? And I still am not convinced that the capital appreciation that some people are expecting is going to come through. And if you're looking at it for investment purposes and the rentals are still shrinking, you got to be really, really careful with the numbers. So do the numbers. Don't just assume it's going to be a magic money machine, because it may not be. And there are lots of uncertainties ahead. And the other final point, I guess, Edwin, is, this is not one market. As we keep saying, there is lots of mini markets, and so different markets in different locations behaving somewhat differently. So again, you have to just go granular rather than just take the headline mainstream media story and assume that it's right for you.
And we take mainstream media a lot more seriously. They can rely on so much disinformation that's put out there by the main portals and by the biggest the biggest conspirator of them all being CoreLogic, because they withhold a lot of the information. So look, that's our take, that's our view, and it's been an interesting week. And I'd say next week we're going to be even more excited as to what's going on, Martin, because the inauguration is on the 20th. Some people are calling the end of the world. So others are calling a civil war. And who knows, Martin? I might even attend an auction, and there might be a punch up. I don't know. Just putting it out there.
Well, what we can say is the old rule: expect the unexpected. Edwin, I think, is our advice to everybody this week. So thanks for your time once again. Good to catch up, and congratulations on the broadband. They seems to have fixed your problem, because it's been perfect tonight.
Well, they fixed it, and I had to put my foot down, Martin. I said, listen, this dial-up that you've given me is just not working, and I'm getting called out on all my social media platforms, and Martin's getting called out as well. And what's going on? So I had to go all the way to the top, Martin, all the way to the top. Otherwise, it doesn't get done.
Well, it works. So congratulations. Let's see whether it does next week. Thanks, Edwin. Always great to catch up, and we'll see you next week.
Looking forward to it, Martin. All the best. Stay
See
healthy.
ya. Bye-bye.